Hey guys, welcome back. In today's video, we are talking about why AMC is extremely bullish, the fake orders exposed, how shorts are taking another big hit, and many more in this video. First, we're taking a look at this. And yes, I remain bullish on GME and AMC, not because they were labeled as meme stocks by the media, but the fact that volume has been suppressed in dark pools, a system created for institutional traders to remain anonymous. You can see it almost daily when the volume goes off exchange. Firstly, let's take a look at this already. When we talk about the use of dark pools, you should already know by now what it is and how often they use it. Every single day, we see how dark pool usage is over 60%, sometimes over 70%, and even sometimes over 80%. So already from that, you should understand that the volume is being suppressed. And then when you look at the reason for why AMC and GME is extremely bullish, you can see the reasoning is because GME is a powerhouse of a company and remains undervalued in my honest opinion. And even though AMC is still covering for their financial debt, the moves they made in dealing with the debt and future outlook still isn't priced in. The chart is more about price discovery being manipulated. I don't care who is doing the manipulation. The VPA to me shows accumulation, heavy accumulation since reverse split. My reason for bullish is because the chart looks bullish. Price location doesn't matter to me. What matters to me is the price yet to be seen and where the price will be going. And so this is what we've talked about. Firstly, we've already made a comparison between AMC and GME. Like we've always said, it isn't a competition between the two. They both have their pros and cons. We talked about this for GME. GME does not yet have a very good operational system like AMC does. We talked about with how AMC is operating as a company, all of their revenue structures, but what GME does have is obviously billions of dollars of cash, in which if they do decide where to go, they are obviously able to make very, very good investments towards what they want to do. And they've already made other investments such as the Bitcoin that we've talked about, and that's already proven to be very well for GME. Now for AMC, whilst AMC doesn't have the billions of cash that GME does, what we've seen is how they're operating their business, how they're operating these theaters, how much revenue is producing, how they're able to improve and increase the revenue and obviously improve their profit. Along with that is how they're able to reduce their debt. And so you can see how both have their different pros and cons, both have their different ways of operating as a company, but it all showing how well they're doing. And we've always said this, what I've said on this channel for a very long time is the fact that you shouldn't see how AMC is performing by its stock price that you're looking at, because that is not what's reflecting it. You should look at it by its actual fundamentals, but more importantly, how much suppression it's facing. Because if AMC wasn't showing good fundamentals, then the shorts wouldn't feel a need to suppress AMC, because if AMC wasn't a good company, naturally it will go down. Naturally, people will sell AMC and not buy AMC. It's the very fact that we're seeing that AMC is doing well, which is attracting people buying, and most importantly, not forcing people to sell, that we see how shorts feel the need to suppress AMC. And so that's obviously the point we have to take away from here with understanding how strong AMC is. And then when you take a look at the daily domestic chart for the box office, you're seeing obviously how well it's doing. This is just for daily. And you can see one thing that's very exciting is, of course, the Taylor Swift. The number one for this weekend is obviously the Taylor Swift. And you can see the distributor is AMC Theaters. So once again, showing how AMC is improving with their operations, it's improving their revenue, and you can see the gross difference between the first and of course the second. And so this is what I think is obviously very, very important to take note with how well AMC is improving and how this is the start to what I believe will be another major contribution to the revenue for AMC as we see AMC film distribution take up more. When you take a look at the overall box office, you can already see how well it's doing for the quarterly. So you can see how not only are we doing extremely well in terms of the box office, but we're doing very well for the individual businesses as well. And that ultimately is why we've talked about how it is attracting people to not only buy more AMC, but more importantly, not sell their existing shares. And so this is why we see the shorts feel the need to constantly suppress AMC. Another thing you can take a look at with the difference is the difference between Cinemark and AMC. So we just talked about how, firstly, Cinemark isn't involved in any film distribution, and AMC obviously is, and they're in charge of the #1 movie that's been released this weekend, in terms of recent times. But yet, what we're looking at is when the box office is going up, when major movies are being released, Cinemark is obviously reaping the rewards, yet AMC isn't. And so this is what we talked about with, you don't take a look at how AMC's success is showing with the price, because the price does not reflect what AMC is doing. The thing that you take a look at is the different forms of manipulation and suppression that AMC is facing. And in this case, the very fact that we're seeing other stocks within this industry growing, yet AMC isn't, is already a very big indication of what it's going on. Now, another thing to obviously take a look at is obviously how well AMC's investment is doing. And just like we've said, GME has made good investments, they have cash. And we talked about how AMC has obviously made good investments as well. The only difference is they don't have a large amount of money like GME does to obviously put in. But it doesn't change away from the fact that their investments are doing well. We can obviously take a look at Highcroft Mining. And we've already talked about how this is going to continuously to produce very, very good returns, especially with how the market is showing right now with gold and silver, with all of these commodities. So you can understand how AMC is doing well. Yes, the sheer number of returns in terms of monetary value isn't as big as GME, but it is still very good returns for AMC. And that's ultimately what's going to allow them to grow. And then you take a look at the other hand in terms of what these brokers are doing, what these shorts are doing. Firstly, what we can see are the fake orders being exposed. Multiple exchanges fine interactive brokers for executing institutional option orders as retail trades for over 7 years. And so we've already known for a very long time right now that the data we are seeing for these trades are obviously skewed, because we know that the data they're showing us are obviously all fake because they don't want the truth to get exposed. And over here, you can already see how they're hiding institutional orders as retail trade. And so when we take a look at, and you can see how people are obviously trying to fake it, and I think this is very important because we've seen how people are trying to show data of in terms of shorts are not shorting, but the price going down is because the apes are selling their shares and they're showing data of retail selling. Now, we've already talked about this. When you take a look at the inflow outflow of retail of apes, you will see that more money is going in than it is going out, meaning more apes are buying shares of AMC than there are selling AMC. So we've always said a lot of apes don't sell their shares, but it doesn't mean that no one is selling at all. But there are more people buying. The net is that more money are coming in. And yet, when you see that these data, you can still understand that even then, a lot of these sell data may not even actually be apes, may not actually even be retail, but rather the institutions who are selling and have their orders disguised as retail trade. And so we can already see from there that these fake orders need to obviously be exposed, and you understand further in terms of how AMC is obviously doing very well, how it's attracting, and once again it's obviously faced with the suppression and FUD. And now we take a look at this as well. So along with the brokers faking trades and being exposed, we're seeing how shorts are taking another hit. UBS takes 2 big hits in less than a month. Funds under the UBS Group umbrella face more than $500 million of exposure to bankrupt auto parts supplier First Brands Group through various investment strategies, with one ranking as the biggest unsecured creditor, court documents show. So what we have to understand is that UBS is in hold of the AMC and GME swaps. So it's very important to understand how UBS is doing, because at any time UBS fails and these swaps all blow up, you understand how and see how all of these other short sellers will also struggle as well. And so what we're looking at right now is that as these groups, as these collaterals that are used by UBS, that UBS depend on, are all facing massive exposure right now and could be subject to margin calls, we're going to be looking at how UBS is at a further risk of covering these swaps. And bear in mind, these swaps are extremely toxic. Since UBS has inherited these swaps, we've seen how margin requirements for them has been increasing by the billions. they were first required to have 5 billion, then 10 billion, then 15, and now we're seeing they are required to have as little as $25 billion, right? And so we understand that these swaps are extremely deadly. And so at any point, UBS isn't able to withhold these swaps. They have to cover these swaps. It goes onto the market or it gets inherited by the others. We're going to be seeing volatility. We're going to be seeing these margin calls. We're going to be seeing these shorts blowing up. And that's obviously what we're looking out for. As always, none of this is ever financial advice, so do take advice with a grain of salt. Make sure to do your own due diligence and research. And I'll catch you guys next time.